Okay, Reliance Infra is not a big mover because yesterday numbers, even though on a consolidated basis they were above street estimates, but there was a one-time tax write back which really showed up the numbers. The challenge for Reliance Infra, of course, is the EPC business because government spending is at an all-time low, and because government spending for the quarter gone by was at an all-time low, the EPC business took a knock. So what's the way forward for the company in the near term? Let's discuss that with the management. The Chief Executive Officer of the company, Mr. Lalit Jalan, joins us. Mr. Jalan, good morning. Always a delight to have you back on ET Now. Before we get into specifics, first a word on how things have moved for Reliance Infra for the quarter gone by.
Yeah, we had a very encouraging and a very positive fourth quarter for Reliance Infrastructure. All our critical segments, namely the electrical energy, the infrastructure and the EPC businesses have performed very well. If I look at the electrical energy business, we have had a top line growth of almost 28% and an EBIT growth of 54%. In the infrastructure business, we have seen a 65% growth in terms of top line for the year, and the EBIT for the year is at a 40% margin to top line. And on the construction segment, we had given a guidance of 7,000 to 8,000 crores of top line with 8 to 10% EBITDA margins, and we are very happy that we have been able to live up to our guidance. So on a quarterly basis, we have seen growth in profits from 410 crores to 725 crores, which is a very strong growth of 76%.
Right. What were the key highlights of the electricity segments which also received few favorable regulatory orders this time?
If I take the electricity business, it's broadly made up of our generating assets, our Mumbai distribution business and our Delhi distribution business. On the Mumbai distribution business, we had 2 or 3 major orders which have come in our favor. One of them is the order from the Appellate Tribunal of Electricity, which upheld the charging of cross-subsidy charges on the customers who have migrated to the competition. And the other one, which came just end of last week, was the quantum of cross-subsidy for the year FY12. Based on the FY12 order, the cross-subsidy has now been enhanced to 750 crores annually from the migrated consumers. This cross-subsidy of 750 crores annually from the migrated consumers creates, for the first time in 3 years of the competition in Bombay, a truly level playing field.
Mr. Jalan, your margins have been steady, well over 12% for 4 quarters on the trot now. But the big question is, are they sustainable?
If you look at our consolidated business, it is made up of broadly 3 segments. One is the electrical energy segment, then we have the construction segment, and we have the infrastructure segment. If you look at the electricity segment, the margins are typically in the 12 to 15% EBIT margin range. Similar margin exists in the 10 to 12% range for the construction business. However, if you see the infrastructure business, these are much higher operating margin businesses. If you see our margins for the infra business for the year that just went by, these margins are at 40%. The share of infrastructure in our overall revenue would increase going forward. So what we see, 520 crores, which is a growth of 65% over last year. We expect it to be almost 900 crores in the coming year, and almost doubling again in FY15. So you'll find the operating margins on the upward move as more and more share of infra revenues comes into the balance sheet.
The order book and revenue visibility is also a key concern for analysts. Give us a sense of what's in the pipeline there.
The current order book is to the tune of 10,500 crores, which gives us a revenue visibility of the next 18 months. There are various projects which we are in active discussions, both with Reliance Power and with Reliance Infrastructure, and we expect these are very, very large ticket projects. We expect that some of these projects would fructify in the coming 6 to 9 months, and that would enhance the order book substantially.
Right. So what were the toll revenues in the quarter? 8 out of 11 projects we believe are now generating revenue for your company.
We have a total portfolio in roads of 11 projects, out of which 8 projects are generating revenue. 2 of the projects are almost ready, and we are expecting approval from NHAI any day, and so we should have 10 projects shortly, and the 11th project will become revenue operational by the end of this financial year. So by the end of FY14 we'll have all the 11 road projects generating revenue. So the road segment, which we started investing in the 2007-2008 time frame, have now started generating reverse cash flow for the shareholders.
Tax write-backs have been instrumental in boosting your PAT ahead of analyst expectations. Was it a case of overestimating the tax liability? Is there any significant implication of this?
We had aggressively provided for deferred taxation in the last 2 years, and based on the projects that we had, and we could write back some of those deferred taxes in the current year. For a company such as ours, with the tax planning that we do, we expect to be on a long-term basis at the MAT tax rate. So if you look at the last couple of years, we had paid significantly higher tax, and we could get write-backs on the deferred tax provided in the previous 2 years, which have given the benefit in the current year. There is also a scheme of amalgamation of some of our subsidiaries with us, which has provided us with a tax credit of about 90 crores. So these are the 2 items which have given us the benefit in the current year.
Talking about specific projects, the Pratibha Kollam transmission project is, what is the timeline? It is expected to start by September. Do you think you've got all the permissions in place, and by when will the revenue really kick in from that project?
The Parvati Coal Dam project, which is a joint venture with Power Grid, we have all the approvals in place, including the forest clearances. The timelines given to us now, based on the startup of generating stations of the hydro plants, is end of FY14, and we are well on target to achieve COD of our lines ahead of the commissioning of these hydro projects. So we expect both the lines to be commissioned during the year. One line could be in the current calendar year, and the one would be around March 2014.
Right, the Delhi Airport Metro has also restarted operations. What has been the contribution from there, and what are the traffic trends that you're seeing right now? Have all the disputes with the DMRC been resolved?
The Delhi Metro, after the repair of all the defects in the civil works by DMRC, started operation last year, and I'm happy to state that the trains are now running without any glitch. It's running like before. All the bearings which were defective, the 2200 of them, have been replaced by DMRC at their cost. We expect the lines to be EBITDA break even by the end of this financial year, and the traffic unfortunately is currently lower than where we closed the line in early 2012. We expect that the traffic will grow with the more awareness of the line starting, and we expect our traffic growth to come back to 20,000 where we had closed. Once we achieve that, and with better connectivity with T1, we expect that this passenger growth will move forward to the 40,000 for which the project was originally designed.
And final question, Mr. Jalan, the phase 2 of Mumbai Metro is also stuck due to clearance issues. By when will work finally start on it?
These are stuck owing to various clearances, some of which are with the environment ministries, that is the two depots that we have at the two ends of the Metro 2 line, as well as certain approvals that we need on real estate from BMC. Once these approvals are in place, we will start construction. The designing and all those other activities for us is over. The financial closure has been done long time back, so we are waiting for all these approvals.
All right, many thanks for joining us, Mr. Jalan, and giving us that perspective. Reliance Infra in the session, bring that stock up for you, up 2%, shy of 400 at this point. The one company that